What's up, everybody? I want to give a shout out to everybody who was in the live stream earlier. Man, I had an amazing time, and I hope that you guys did too. Stephanie, Lou, Ebony, Nick F, Matt, Alex, and everybody else that was in there participating and having a good time with us. Make sure to check it out sometime. If you haven't come to a live stream, make sure to come, ask some questions, get to know everybody that's involved with all of this, and have some fun, right? So let's talk about a question in this video that I see a lot, that might not get some very popular answers, but it needs to be addressed, okay? And the question is, when will AMC stock squeeze? Everybody wants to know when it will squeeze. And I don't know what everybody else out there is saying, that it's going to happen tomorrow, it's going to happen next week. Look, guys, if you think that it's going to happen tomorrow, there is a very, very low likelihood that it's going to happen anytime in the near future. Now, in this video, we'll go over some of the stuff that we need to see in order for the short squeeze to happen, and what we can do as retail investors, as holders of AMC, to help, initiate this process. So if all of this sounds like something you're interested in, let's get started. What's up, everybody? I'm Clay. I'm here to make 2021 the best year ever. If you haven't clicked that subscribe button yet, make sure to subscribe to the channel. Join us, become a bro. We are here every single day, and we're growing our portfolios together. All right, look, by now you've noticed that all of my videos may not be the most popular videos out there, and I tell it like it is, right? So listen, if you bought AMC stock, whether you bought it recently or you've been sitting on it for months, here's the thing, and this might be a little hard to hear, but we'll go through it, we'll explain it, and we'll talk about what needs to happen. AMC is probably not going to squeeze tomorrow, and I say probably because anything is possible, but the likelihood of it happening tomorrow, very low. The likelihood of it happening anytime soon, low. And here's why. AMC is still well, before we get into that too much, we need to have a basic understanding of what the short squeeze is and how the actual squeezing part can occur, okay? Now, we know by now that shorting a position is selling it now and buying it back later. It's an obligation to buy these stocks back. And there are so many different numbers out there that you can use for shorts, whether you're using, not speculative, but whether you're using synthetic shares or whatever your number you're coming up with, right? We know that there are a lot of shares being shorted right now. So let's focus on and let's discuss how volume is going to create risk for the hedge funds. Now, today was a decently low volume day. There was 39 million shares traded. But look, shares were shorted today. Shares were bought today. It's a transaction that goes on day after day after day, okay? And you can't assume that all of the hedge funds have short positions only at the, the low price, $1.90, $2, somewhere in that range. Hedge funds, I'm sure, have shorts at the $20 high. They have shorts at the $14.50 resistance. They have shorts that are currently profitable, okay? And this means that until they get to a point, until the hedge funds reach a point that their shorts are, one, no longer profitable, and two, it's going to take them such a long time to cover their short positions, it puts them in a position of risk. Now, why is this risk so important? Why do I always talk about the risk? Because look, a short squeeze is going to occur in one of two ways, okay? One, and this is the unlikely scenario. One, a short squeeze could occur if all of the hedge funds shorting AMC decide on their own to go out and cover those shares that they have shorted. So if they decide without any external regulation or without any external margin call, they say, it's time to go out and cover our shorts. And they go out, and in addition to all of the retail investors buying and selling AMC stock, in addition to all of that, normal volume, the hedge funds go out and create new volume, driving the stock price higher. Now, using volume like the 40 million that we had today and the reported shares outstanding, it's only going to take them 2 days to cover these positions. But keep in mind, as these people who are trading AMC stock, swing trading, day trading, Because there's volume every single day. People are buying and selling AMC stock. They're not all holding AMC stock. So as people are out there trading, more people are going to jump on board, right? Well, people are going to say, oh, yeah, well, this could just be a nice little peak right here. I'll grab this and I'll buy back in later. Well, all of a sudden, if they see the price shoot up to $16 a share, there's added volume in there, the shorts could cover their positions, right? And then we're going to see a short squeeze that isn't really too much of a squeeze. And that is absolutely not what I want to see, and I hope that is not what you want to see. Guys, when AMC squeezes, don't give the hedge funds, don't give the shorts any room to get out of this. Day trading AMC is allowing hedge funds to know that they're not in a risky position right now. It allows hedge funds to know that at any time they want, they can go out and cover their short positions, okay? So keep that in mind. If you're out there day trading or if you're out there swing trading AMC, know that it's not adding to the cause. So what can we do? How do we see the biggest squeeze possible? How do we see the highest price possible, okay? And this is going to be a two-parter, okay? Because to see the highest price possible, you need to put the hedge funds in the riskiest position possible. So the lenders, the brokers, the people with these short positions out, the banks, whoever it may be that has money in the hedge funds, triggers a margin call. Now, a margin call comes in when hedge funds are forced to cover their short positions. Now, they will be forced to cover their short positions if the lenders know that their money is in a risky situation. Okay, if you've ever traded on a margin account before and your account balance went below a certain level, your positions were automatically liquidated, and that was that. Your account was done. You were automatically liquidated because you got margin called. Now, that means that whoever lends you those shares, whoever lends you that money, can no longer associate with that risk, and they force you to sell those positions. And yes, the amount of shares that hedge funds have shorted right now, if covered all at once, without the hedge funds doing it themselves strategically, this will cause the price to skyrocket in a way that is what everybody is wanting to see. When you think the possibility of 100, of 1,000, of 10,000, anything is possible theoretically, okay? I tend to want to stick in triple digits, right? I believe that 1,000 is going to be a very, I don't even want to say conservative. I believe 1,000 would be a very good number to reach in this short squeeze. Why? Because I believe that a lot of retail investors are going to be tempted to take their profits much before it reaches, levels even close to that. When people that have never seen $100,000 before have $100,000 in their account, they're going to take profits. When people that have never seen $1 million before have $1 million in their account, they're going to take profits. So it's going to happen, okay? Now, yes, theoretically, if everybody holds out, if nobody sells, the price will rise forever, okay? It will rise forever because the demand is there, but the supply is zero. So you have to continue offering a higher and higher and higher price until it finally gets met. So how do we allow this to happen? How do you create as much risk as possible for these hedge funds? Well, high price and low volume create that risk. And here's why. A high price would allow all of the shorts that they have out right now to go into the negative. They would be underwater on all of those shorts. They're in the red. They're sitting on losses, and the lenders don't like this, okay? Obviously, the lenders don't like to see that money is being lost. Money at risk is never good. The red is never good, guys. And then the low volume. I know you might see people saying high volume is a good thing because it drives the price higher. Yes, that's true in an aspect. High volume can also drive the price lower if a lot of people are frenzy selling and a lot of people are going out there and selling shares off at a high rate. Higher volume just means higher volatility. Okay, don't always associate high volume with a high price. So low volume. Why is this key? Why is low volume key? Because if you hold the shares, if nobody is willing to day trade AMC, if nobody is willing to sell AMC, it puts the hedge funds in a position where they know that they can no longer cover all of their shorts on AMC stock in 1 day, in 2 days, in 3 days, in 4 days. You want the volume to be as low as possible to create as much risk as possible for the hedge funds. This is called days to cover. Now, the higher the days to cover, the more risk associated with those short positions. So if you see volume go down to, let's just say, 1 million, and if you use some of the most recent numbers out there, like the 70 million shares being shorted, it would take the hedge funds 70 days to cover those short positions. Anything above 8 is considered risky. Anything above 8, banks, lenders, institutions, they're going to say, okay, that position's getting a little risky. We're going to margin call you and we need our money back. We can't be associated with this risk. So that is what's going to cause the short squeeze to happen. It's not going to be day trading and shorting and buying at any price, and they can play this game forever. Okay, they can play the market as it is right now forever. But if we put them at risk, their lenders will notice and they will get margin called if that risk becomes great enough. So we absolutely need to keep that in mind. If you're out there day trading AMC, consider this a strategy. If you're wanting to see the squeeze, consider it a strategy to buy and hold the stock. Not to take profits on 5% gains and 10% gains and buy the dips again and create all of this volume, because yes, at the end of the day, they do need to cover. But at the end of the day, they don't need to cover at any specified time or any specific time frame. They could sit on those shares forever. Okay? So don't allow them to sit on those shares forever. Cause a margin call to happen and the short squeeze will happen. So if you were looking for an exact date, sorry, nobody can give you an exact date on when the short squeeze will happen, whether it's going to be soon, whether it's going to be far. But just know they can play this game that they're playing right now. If you feel like you're treading water, they can play this game forever. They can play it just as long as we can, and it's not good news for us. So guys, I want to know down in the comments below if you think that AMC stock will squeeze because of a margin call, and what you think that we need to do in order to further along this process so that we don't sit here and tread water and play tug of war forever, so that this doesn't play out into 2022 and beyond and all of that. Let us know down in the comments below, guys. And as always, if you're holding AMC, keep those diamond hands. We're all in this, and we're all in this together. If that subscribe button is still red, guys, subscribe to the channel. You've been here for almost 13 minutes already. Join us, become a bro. We're here every single day. We're growing our portfolios together. Link in the description below. Sign up for Webull, deposit $100, get those free stocks, sell those free stocks, buy AMC, hold AMC, cause a squeeze, end up with a lot of money. And guys, if you want to share this video too, girls, I know there's like 9% viewers or girls out there, share the video somewhere. Tag me at Claybro or Claybro883 on pretty much any social media out there. I would love to follow you guys back and see what everybody's interested in investing in. Now you already know what it is. Until the next time, I hope that each and every one of you have an awesome day.